Thank you, Pierre. I'm very pleased to welcome back Patrick Heusser from Crypto Finance, Head of Trading over there. Thanks for coming back. It's been a while, Patrick. How are you doing?
It's a pleasure to be here. Thanks for inviting me.
Good to see you. Good to see you. So look, let's dive in. I know you've got a couple of charts that you want to look at. Just looking at recent market activity, first in Bitcoin, and then maybe we'll touch on some DeFi movement as well. What are you seeing in the Bitcoin market?
Well, if you look at the big picture chart, then you can see very clearly that the market had a very bullish tone over the past several months, and we had a very nice breakout out of the recent highs, out of the clouds, and it was also accompanied with good volume. So it all looks like a proper bull market.
Yeah, and what do you think the critical levels are on the downside that people need to watch?
Well, first is 14,000. I see a bit of a wide range, 16,000, 14,000 for the consolidation right now. It can actually go through even towards like 11.2, sort of, but I don't really believe we're gonna dip down there anymore.
Sure, okay, but all traders should have their stop losses in place just in case.
Yeah.
Like sharp weekend movements. We saw one of them last weekend. And what about DeFi? That suffered after its kind of, big run up during the summer and had a big pullback, but it seems to have turned around a bit. What are you seeing there?
Absolutely. We saw a lot of suffering, even though the suffering was sort of short-lived, but it was very painful, very quick, which is quite normal in these kind of small cap tokens. But the rebound was astonishing, especially in the bigger DeFi tokens. We call them blue chip DeFi tokens, and they have some more juice to go. With let's put it that way, if Ether doesn't let us down, then they really have some more power to the upside.
Sure. Okay. I mean, we'll come on to it a bit later because we're going to talk a little bit more about DeFi, and I guess, as you say, the whole kind of Ethereum migration, which has kind of kicked off recently to move to proof of stake. So we'll come on to that. I know another area that you guys look at closely is across the CBDC market, central bank digital currencies. Seems to be moving apace. I know the the Treasury, Rishi Sunak came out, the Chancellor in the UK came out this week and set down some proposals for putting some guidelines in there. What are you seeing across that space?
Well, it's the usual thing, right? Asia is marching ahead. I mean, especially China and the smaller countries, they're quite far or advanced in their projects. I mean, you wouldn't even call them projects anymore. I mean, Cambodia went live with a CBDC solution, and they have already some commercial banks attached to it. Thailand, Hong Kong, they have some sort of a payment gateway between each other, also on purely digital. And then obviously China with their CBDC or E1, they call it, which is very advanced and already working in a few areas or states or provinces. We see then obviously Europe with a far bigger issue with so many countries and so many different opinions and politicians, only in a project phase right now. They say they're going to come together in June 2021 to discuss all the different opinions. And I mean, if you ask 20 politicians what they want or need, you get 40 different answers. I'm not quite sure how quick Europe will get to a proper CBDC project. The UK, obviously, in a different situation right now, just need to look out for themselves. But obviously, they need to make sure that they stay connected to their trading partners, which I believe the CBDC is going to be the key every country needs to be able to settle their goods and their money. And I think as well, the CBDC push gave the stablecoin markets another positive spin, because everyone knows that the nations or governments, they're working slow or slower. But the stable coins are already here. They're already working. We have several billions in those stable coins already parked and moving around the globe. So I believe that corporates will fairly soon look for stable coins to move around funds, intercompany wise, but across the globe. It's going to be a cheap and fast solution for them. And as soon as they have the infrastructure in place in their companies, this is going to be a solution they're going to use.
The other big story of the last few months, which everyone's kind of assuming has given like Bitcoin in particular a big uplift, is some of the news of kind of high profile investors entering the market, and also corporate treasury being allocated. Obviously the biggest one was MicroStrategy, and then followed by Square. What's your thoughts on that space?
At least it gives me some answers, because I was watching the as a trader, I watch a lot of charts and especially order book graphics, and the move up in Bitcoin over the past 2 months was not driven by derivatives. It was not driven by any leveraged guys out there. It was not driven by liquidations, and it was not driven by large bid side orders in the books. I just saw the price moving. I just saw people coming in, buying at market and lifting the offer, and the offers got thinner and thinner. And I was like, well, how can this be? I mean, we just eating through 5,000 Bitcoins on the Bitfinex order book like there's nothing. And all these news now on the back of it, they make total sense to me. So they're just buying constantly. They're obviously just, they're not buying big clips, but they buy constantly, and that's exactly what we have seen in the market.
Sure. And I think the other dynamic which I noticed was at the same time, and I guess that kind of supports that kind of thesis, is a lot of Bitcoins are being withdrawn from exchanges now. So they're being moved to cold storage, which would make sense that what was inventory for traders sitting on exchanges to trade with is now being bought for long-term holdings. And I guess that could have, more liquidity implications going forward. I mean, you said you've seen trades eat through order books like, a knife through butter. And we're just, if there's less liquidity on the exchanges, then, we could see a lot more of these kind of sharp moves upwards if that trend continues.
Correct. This is also something I'm watching on-chain analysis. As you just mentioned correctly, the balances on Bitcoins on exchanges rapidly decreased. And I talk about it and I label it as a sell-side liquidity crisis, which seems to, I think we're in the middle of it, actually. And if I'm not seeing on-chain movements of large amount of coins going back to the exchanges, I just believe that the price can only go up, because there is just nothing that can stop the buying pressure we see at the moment.
Sure. Actually, I think that leads us in quite nicely to kind of just the final part that we're going to talk about. We mentioned we come back to DeFi, and also how that ties into the ongoing migration or potential migration to ETH.2. A week ago, Ethereum opened up their deposit contract, which is designed to allow existing ETH version 1 holders to deposit their ETH into that contract. And when it reaches a critical threshold, which I believe we're still some way short of, then that will effectively trigger the launch of the new network. And I guess it feeds back into that same question about future liquidity crises, that if you've got a network which is actively encouraging or requiring people to lock up funds on the network, then that affects A, liquidity on the exchanges, and B, with the DeFi movement, you could argue that funds aren't being deposited because people are seeing that they've got more potential opportunities in kind of yield farming. Plus you have to, as I understand it, lock your ETH version 1 up into the contract for 2 years. What's that going to mean? And in general, your other thoughts on DeFi at the moment? Yeah,
well, in general, as you also pointed out correctly, there is quite a bit of BTCs wrapped up in the DeFi space. So this is also taking liquidity away from BTC. And then, as you also said correctly, the whole DeFi sector works with coins being locked up in certain vaults or in staking contracts, which takes out liquidity of the market just by concept. But what I think, or where I see there is a lot of potential in the DeFi sector, is building these products which are they're no new inventions. They're products we know from the traditional markets. Let's start with normal money market borrowing and lending protocols. But the way they're done and the way you can interact with them directly as a trader, investor, or retail guy is just amazing. And it will eat away a lot of trading and margin of the commercial banks when users start to move away and say, well, I have my salary account with the bank, but you know what, I use a lot of my savings in different areas, and I will pledge them into some yield farming projects or into some staking contracts, or even just move them to a deposit platform and earn some interest, because I think no one earns interest at the moment outside.
Yeah, exactly. And just back to the stablecoin piece, I mean, you're looking at some of the yields there versus what you can get with your cash in the bank at the moment, and that's surely going to start appealing to traditional money managers, that if they can, obviously, interest rates are basically your measure of risk, so it's not risk free. But surely there's going to be some more interest and demand there as well, coming in from the traditional space. Patrick, excellent stuff. Interesting as always. Great to have you back, and we'll have you back again on the show very soon. Thanks for joining us.
Thanks a lot.